Hi, just an update on gold here on Friday the 14th of November. I'm looking at GLD and I'm just going to go through the longer dated and then the shorter movements and hedging within the market. So here we can just see that we've had this long green period, and yes, people might see, oh, that's red and during a period, but actually the change in the market was on about the 10th, and a whole lot of the hedging came in on the 10th, and then we've had this bit of an overshoot. And if we just wanted to have a look at that quickly, let's just put this up. We'll go back to, say, the 13th or the 6th. Let's go back to the 6th of October, just so we can see that run. So we can see here, this is calls in the green, high delta over here on the left hand side, and then on the right hand side we've got puts, and the high delta puts are over here on the right hand side. In the center, on both the calls in the green and the puts in the red, are out of the money option contracts, and at the moment I've got a filter set on 0.5 delta, so I'm only showing the 0.5 delta contracts. So here we can see on about the 10th that the top was called, and so what we then see, and we see on the 10th they've closed their positions, or they've rolled them over to out of the money. We haven't seen a huge change in the number of contracts, so they've rolled them in, they've closed them, even though it wasn't the OPEX of the month. And here we can basically see that we've had a slight increase going through, heading towards the 17th, towards that top on the 20th. But it's really, we don't see here in the hedging, we don't see that those big positions being put on till the in the money puts being put on until the 17th. And here on the 20th, you can just see they just evaporate here in the out of the money, and they get rolled out. They get rolled. Sorry, in the money, and they get rolled even further out of the money. And because it's a peaking top, we've actually had an increase in calls on that given day, but that's because they are rolling out. Then here on the 20th, on the very peak, we can see that someone's gone in very hard with 100 contracts short, and they've gone through till the 27th, 28th. So if we just have a look at that, we can see here's the 20th. This is this last final push here, and then they've started selling into the 20th. And then we've had this consistent period of selling here going through the bottom. If we look at that, was there any bit of buying? There is a bit of buying here in the bottom. We've got a bit of increased DPI here in the bottom of that drop, and then we've got this new long position. Is it long? Well, I consider long over here hard, deep in the money. Here on the 7th, we've definitely rolled back across into the money, but we've rolled over in much smaller numbers. Now that might be just delta hedging for people long positions, or it might be new positions being opened. And then we're starting to see this shorting again here. It's started to happen on the 12th. We can see some shorts deep in the money, long dated positions going short. Here again, here they are here. This is in the 0 to 30 options, 0 to 30 days to expiry DTE options, and we can see three things that tell us that this market is going to go short. One is we've got the evaporation, so green is the heaviest number, white is the lightest number. We've got an evaporation of deep in the money calls, short dated calls, and we've got an increase here. This is still, we've got a 0.5 delta on it. So if we go to those out of the money calls, oh, I haven't done that very well. So if we go to the out of the money calls, you can see that they are increasing, and we can also see that there's lots of people having a punt here on out of the money puts. So people trying to get Hail Marys and make good money on it. If we could just go back to the normal position, I like watching traders who go in with a lot of conviction and go in with heavy delta positions, and that's because they're older traders. They're not trying to catch the tops and bottoms. They're giving you they're giving you a wide bit of room to say, let's get in or out. So if we then went in and had a look at the other nuances that we can find by watching what's happening in trading, we can see here in liquidity, we can see here we're in the bottom here. We've had a little bottom here and a bit of buying, and then it's popped up a little bit, and then we've had some re-hedging here, and now we're starting to buy the bottom. A little bit of short, we've gone green again, and we've risen up into this top position here. And here it looks like it's green going into the close here on the 13th, where if we went a little bit closer, we would notice that it's not quite that right. There is some indecision, and there's indecision that just in the last 15-20 minutes we just start to see some rising here of, let's just make sure we're on the right day, we can just see some rising here of these puts and selling into the close, and the ones who've missed it, they've had to sell it on the next day. These day traders have not got that as correct. I suppose it's because it's going into the weekend as well. They haven't got that as correct as these big heavy guys have. They've put their positions on. They've put this weight of positions here on the 11th. So if we go to the 11th and we look at it, here's the 11th. This is all that hedging being put on, even though the market's still rising. So we can see here's the cause, and here's the effect. Even though it's taken a while to wash through, if we looked at it on a longer time scale, we can see that it's much more. We'll just move this little box, and maybe we'll just make these disappear. It's much more that this is actually in a holding pattern. So we've got some buying and selling going on there, even though there are some short-term contracts being exchanged in the center of that. And if we just wipe out a bit of this noise, if we go up a little bit of date, noise is just the difference in colors really. If we just wipe out a bit of that noise, we'll see that it's not actually as strong. We can see that it's strong, but it's not as strong as it could be. That here we've got this heavy positioning coming on. We can see we've lost some in the money, and we've got a whole lot of out of money positions going on. And the dip was bought, and we can see that when this has bounced here, we can see in close on the 15 minutes that although there was some new selling for the day, there is a little bit of buying into it, and here's this selling appearing here into the close. And we can see that here in the long dated stuff, we've got a little bit of new buying and some selling happening. This is the buying here of the re-hedging by the market makers. So gold for the moment looks like it's going to be more sideways action, and it'll be sticking to winding itself back up as new data becomes available. I think the 10th of the 10th is probably this date here that we saw the top. Let's just go out to that. This date here that we saw the top has probably got something to do with the Middle East Accord that Mr. Trump was trying to organise. Oh, the only other thing that I wanted to let you have a laugh at is what happens during a normal day's trading. So this is all the 14th here, and during the 14th by lunchtime we see a little bit of closing. Here we go, we've got 10:40, we've got a little bit of closing there. Here 12:40, you can see it's up a little bit. That's the lunchtime effect. We see it in all stocks. We'll see it here as lunchtime comes along. As we move into the middle of the day, people have flattened their hands and they go to lunch and they come back. It's also very evident in the main indexes. Anyway, I hope that you enjoy my little gold update. So gold is going to go sideways for a little while, and if you follow me on Naked Delta and have a watch our stopwatch, you'll see updates on the daily movements, and once a week I'll try and do an update on where we are in gold, or if there's going to be a movement starting. Thank you very much.